When it comes to building a DeFi portfolio, there are so many intricacies and so many things that you have to think about. There's literally tens of thousands of options out there, and when you take a look at DeFi Llama, it literally would take forever to scroll through all the different opportunities that are out there. So as you can see, there's over 10,000 pools right here. That's a lot of different pools that we could deploy our capital into. And there's many strategies that go even further than these 10,000 pools. So how are you able to zone in and build a robust portfolio when you're unable to truly see which positions are doing the best? So that's exactly where Metrics Finance and other softwares that are tailored to concentrated liquidity come into play. First thing I'm going to say is that here at Builder Wealth, we truly believe that concentrated liquidity is the best form of yield you can get in decentralized finance. Same goes for liquidity mining and liquidity as a service. And the reason is because it's real and it's true and it's a very simple and scalable business model. So whenever someone swaps one currency for the other on a platform like Uniswap or Aerodrome, so for example like ApeCoin to Ethereum, they're executing a trade. And since they're executing a trade, a service is being executed basically. The liquidity provider is providing a service, which is where liquidity as a service comes into play. And of course, that trader is going to pay a fee for that service. And a lot of times that fee is about 0.3% on the overall trade value. And that's very low compared to the fee you would pay over on a centralized exchange, which could be like 2 or 3%. That's like 90% less. So it's a win-win for both the liquidity provider and the trader. The liquidity provider, yes, does lose a bit of exposure to one asset, and in return the trader gets to swap one asset for another and pay a much lower fee than they would on a centralized exchange. And the thing is, this is not a new industry. There are $87 billion in the DeFi market right now, and on Uniswap alone there's roughly $4.7 billion. And the thing is, there's many other decentralized exchanges out there. It's not just Uniswap. So as you can see here, there's Uniswap, QuickSwap, PancakeSwap, and more. Today we're going to be covering how you can actually start to crunch the numbers, how you can actually start to find the position, what you need to look for, and how you can actually start simulating results. And this is all to be able to potentially build out a portfolio and track it. We're going to be using the software Metrics Finance, and the great thing about watching this channel is that if you click the link in the description below, you can get a free 30-day trial to the pro version of Metrics Finance. Usually if you were to sign up on their website, you'd only get like a 5-day free trial, but using my link, you can get a 30-day free trial. So first things first, when we're on Metrics Finance, we're going to select the exchanges and the networks we want to be on. We personally are going to select all of them here, and by we, I mean we at Builder Wealth. So and then next to select network, I'm going to press select all as well. I want to go where the yield's at, but I also want to go where there's solid assets, and typically this requires me to look across every single network and exchange. So next thing I'm going to do is adjust my calculation range to 14 days. That's my preference. And as far as Aerodrome and Velodrome positions, I'm going to check that as staked. I'm going to leave it on stake. And when it comes to the pools, I like to include Ethereum, but I'm not going to type in Ethereum here because then it's going to show me it's still 1,000 pools. There are just so many different Ethereum pools. What I'm going to do instead is type in the assets that I want to pair with stuff like Ethereum or Sol, etc. So here's some assets that I typed in right over here, and you can see that the pools went from 1,000 all the way down to 179. Now for me, that's a lot of different pools, especially having to go through and sort about 18 pages worth of pools. That's a lot of work, and obviously the goal of Metrics Finance is to make your life easier. And after the owner of Metrics Finance has worked with multiple institutions and was able to see what they look at when they're actually deploying capital into their DeFi positions, the owner of Metrics Finance wanted to be able to view all of that data and crunch it together without having to use crummy spreadsheets and other things. But rather, he just made things really easy over here. So that's how Metrics Finance came to be. So first thing we're going to do is filter the APR. And one thing you guys are going to realize is that this APR here is probably going to be lower than what you guys are looking for. But when we actually start to dive into the positions and adjust the range, that APR can change and it can possibly go up. So if we go ahead and here hit the filter button and type in higher than 25% APR, now the results go down to 48 pools. We have 48 pools available. And then we're going to go ahead and type in lower than 1,000% because sometimes there will be some unsustainable pools or meme coin pools that show a very high fees APR. So and then for price volatility, I'm going to do above 4% because if there's not at least some volatility, it can be hard to get some fees. So now our pools went down to 27. Great, we're getting more and more narrow. So the more volatility there is in the market, obviously the more fees we're able to collect, and this is because when the assets are moving up or moving down, it creates volume, and volume creates fees. But with that being said, we don't want it to be too volatile, so I'm going to do lower than 30%. Okay, so it seemed to not knock off any pools, so it still says 27 pools, so I'm going to do lower than, let's see, 13%. Okay, only knocked off one. Let's go to 10%. Okay, I'll leave it there. At least we have a good range of different pools that we can look through. Now it says there's only 3 pages of pools. pools. And additionally, when it comes to the TVL metric, I'm going to put that at above 500,000 right here because I want to look at stuff that at least has a decent amount of TVL, but also not too much TVL. So as far as these other options, we can use them to narrow down our pools even more, but I do have 11 pools, so I'm all set for now. So I'm going to start at the top. I see stuff like Ethereum to Matic. That's definitely going on my favorites right here. So I'm going to click the star, and now it shows up in my one pools in the favorite pool section. The reason why I'm favoring it is because I believe that Matic can do pretty well in this bull run, so that is a pretty good reason to look into the pool deeper. So now I'm going to go through and look for different pairs that I personally think could be a good fit in my portfolio and that are also doing decent returns and kind of suit my risk tolerance. So Ethereum to Matic, and I'm going to go ahead, I'm going to take a look at ETH Render and then Render Sol, as well as the USDC to wrap the Bitcoin at the bottom. So this is all I'm going to do for now. I got 4 pools right here that I can dive deeper into and do my own due diligence on each specific token. And if you're looking at some pools and you're unsure about some of these tokens, for example, Render, say I didn't know what Render is. You can go ahead and copy Render, go to CoinGecko here, paste in Render, click on it, and you can see more info about the price, the market cap, the 24-hour trading volume, the supply, and more. You even get direct links to their website, so you can go ahead and click on the website, read more about Render, and do your due diligence, and see how Render actually serves the DeFi community. Anyways, once we start to have a list of pools that we want to dig deeper into, and once we've done our due diligence on the assets, we can start to simulate. Now, this is the next part of Metrics Finance. So here, on the ETH to Matic pool, I go over to the Simulate tab all the way on the right, click Simulate. I'm going to open it up in a new tab here. And once we're here, we're going to start to find our range and adjust some things to try to be simulating accurately because we want accurate data. And of course, it's not always automatic. Like if you go to DeFi Llama, it's going to be automatic. But as you can see, if you sort by APY, it shows some pools doing like 25,000%, 14,000%, 9,000%. Pretty insane thing. Like, is that accurate? Probably not. And that's just a limitation with literally like any automated system. But since Metrics Finance can do automation along with the ability to do manual overrides, that's what's going to allow us to see the most accurate results we can. The first thing I like to look at when I'm diving deeper into these liquidity pools is the correlation. This one's at 0.72. So this means it's somewhat correlated but not perfectly correlated. So for example, 100%, if it said 1 here, it would mean the assets are 100% correlated to each other. So that means that they would be rising and falling at the exact same amounts, and 0 means that there's no correlation to them whatsoever. So when it comes to the range, I probably would want to go broader because it's not super correlated, but I can do something like 7,000 and then 4,951. And that puts me more towards Matic at 74% Matic and 25% wrapped Ethereum. So that's hoping that Matic does better in this instance. And if I were to allocate roughly $10,000 here, it would showcase an 80% yearly APR and $21 a day. So it says 80% APR, and obviously that's really good. But we want to do some more things to try to make sure it's an accurate APR. So one thing we can do is drive the current price to where there's more liquidity, like right over here. So as you can see, we're now getting 54% APR, almost 55%. So we should assume that this person or the people over here that have their liquidity are going to move their liquidity to current prices, but we also can assume that the price is going to revert back over here. And when it does, at that point, we'd get about 55% APR. So that's kind of like a worst case scenario. We don't have to assume that right off the bat, but we should keep it in mind. And also we need to take a look at volume history. This is more important than anything. We need to make sure it's consistent or somewhat consistent. Looks like we have a bit of volume and not much, a bit, not much. Then we have a huge spike over on September 13th and then down to not much and then a bit. So I'm going to go ahead and use a 3-day calculation range over here, and that's going to show us only these days worth of volume. If I go ahead and change it to a 3-day calculation range, it's going to change our APR to now 41%. So now if we adjust our current price and our min price and max price, it's saying we're getting 45% APR. Am I happy with that? Yeah, I'm pretty happy with that. So I'd want to do some more due diligence and check out these tokens more and then potentially add them to my portfolio. Now I can go back to my list and look at Ethereum to Render, hit simulate, and I'm going to execute that exact same process. And I'm going to do the same thing on the other assets that I favorited. And once I start to simulate it and pick the ones that I'd want to invest into, I can go ahead and click save to portfolio in the top right. Then they're going to show up in the build section on Metrics Finance. It's going to aggregate all the different positions that I've saved to my portfolio under one dashboard. So then I can see overall performance from all of them. So if you look at the Bitcoin USDT position, it says 35 bucks a day, Ethereum to ATH doing 48 bucks a day. Then it combines it in the top right in the estimated fees, saying this whole portfolio would do $332 a day if you had a bit over $200,000 invested into it. And this is all off of different deposit amounts and allocations. So if you want to change it, so for example, for the Bitcoin to USDT position, you can go ahead and hit the little gear icon on the right and change your deposit amount. So it's set to 35,000. I can go ahead and change it to like 30,000 and then hit update. As you can see, here we go. It's going to load. Now my deposit amount changed to $96,000 and my fees went down a bit. Remember, make sure to claim that free trial of Metrics Finance in the description below. And guys, I went ahead and put together a guide that teaches you exactly what liquidity mining is. And I'm going to leave that link right down below in the description. All you got to do is enter your email and you'll get access to it. It tells you a bit more about myself and also how you can get started in liquidity mining. But anyways, make sure to subscribe and click the bell to turn on post notifications so you don't miss an upload. I'm really trying to gain more subscribers. And anyways, I'll see you in the next one. Have a good one.